Hey everybody, Smart Silver Stacker here. Hope you're doing well. So the price of silver breaking out of a months-long consolidation pattern this morning, breaking out in a pretty big way too. We had a nice rally in silver yesterday, and I mentioned in the live stream that we would need to see a continued rally today to confirm its breakout from the consolidation pattern that you are looking at on the screen right now. Well, we got that. We got that in a big way. Price of silver slicing through $30 like a hot knife through butter. And you know, it's not just silver. We've also got gold breaking out once again today to another record all-time high. So you got silver price putting on some big gains. You got the gold price taking out record all-time highs. What's driving this? Well, investors are preparing for massive dollar debasement, and we recently got some new data from the treasury that really confirms that that is right around the corner. So we'll take a look at that today. Also, today's video is sponsored by SD Bullion. Now, I know silver is rising. Gold is, at the highest price it's ever traded at, and yet silver really remains very affordable here, especially junk silver. I did a video the other day about how many of these junk silver coins were minted and how many are likely left. If you haven't seen that video yet, you should check it out. It's pretty interesting, but it convinces me that when you look at the numbers, junk silver is very, very undervalued at the low premiums it is currently trading at, and so that is what I am focusing on stacking at the moment. Not financial advice, but you want to get your hands on some junk silver. SD Bullion has some pretty good pricing on it, so check them out. Now, one thing I want to talk about in regards to this breakout in the silver price, the breakout in gold, is how unloved this bull market really is. This is the front page of Bloomberg, okay? You would think that as gold is taking out record all-time highs 2 days in a row, you might hear something about this on the front page of Bloomberg. But let's look. Let's search for gold on the page. The only place that the word gold appears is in the ticker at the top of the screen. Now, I mean, there's lots of news being covered here. You've got U.S. consumer sentiment rising. If you're a consumer, let me know how your sentiment is about the current economy. Let me get rid of this search bar here. And I mean, we can look at what else is making the headlines here. If I can scroll down on Bloomberg. Okay, well, Bloomberg is being a little buggy. I wanted to go through this and look at just how inane much of the news that is being covered is, and the stuff they're distracting you with. I mean, over here on this headline ticker here, you've got what? Okay, a new missile crisis, dollar dominance in question, how central banks have won the battle, China, an Evergrande news, all sorts of stuff, but nothing about the breakout in the price of gold on the Bloomberg front page here. So this shows you a number of things. It shows you really how unloved this bull market really is. And when that changes, and eventually it will, eventually people are going to get the memo that inflation is not going away and safe haven hard assets are going to be in big demand. You will hear it talked about on the news, but we're nowhere near that point yet. That's why I say, despite the fact that gold has broken out to a record all-time high, it's still undervalued. And silver, at just a little over half of its all-time high, is incredibly undervalued today. And part of the reason is that they get no attention because, yeah, as Steven in the chat here points out, they don't want to mention anything about gold or silver because it shows how bad the economy really is. Oh, you mean we don't have the best economy on record? The Fed has not won its inflation fight? Yeah, I mean, that's the narrative we're being told, but of course that is all, bollocks. And look at this chart here of the U.S. dollar index. This chart, we've been looking at this for a while now, broke down from critical support back in mid-August. Now, since that time, it's had a bit of a consolidation. But one thing on this chart, I think it's starting to look a little bit like a double top. You've got a peak right here. Let me see if I can draw these peaks here for you. Peak there and a peak here. And that would put the neckline right around here, the trough between the two peaks. We draw the neckline there. So the dollar index for the past 2 days has been breaking down pretty significantly. the Fed is right around the corner from cutting interest rates. Debts and deficits are exploding. We're going to get to that in just a moment to show you how bad the debt and deficit problem has become. As bad as we know it is, it's worse, right? And the new data from the Treasury really shows that. But look, if we get a breakdown in the dollar index below this neckline, which it is fast approaching, from a technical standpoint, that looks like a classic double top to me. It's going to be lookout below once it gets just a little bit lower. And that appears to be the scenario that we are being set up for here. And I think that has to do with why gold and silver are taking off. Now, Isaac in the chat here says, what's your opinion on gold's direction after rate cuts? That's a question that I've gotten from a variety of viewers in the comments recently. And, well, let's talk about the Fed cutting. So the Fed is now factored in for a 43% chance of a 50 basis point rate cut next week. The FOMC meeting kicks off on the 17th. I actually said the 18th yesterday, so thank you for those of you who corrected me. But we'll be getting the decision from the FOMC on the 18th. That's Wednesday. And it's almost guaranteed we're going to get cuts. The question is how deep. Now, how will gold and silver respond to that? Well, it is possible that we get kind of a buy the rumor, sell the news moment. And I think that if we get a 25 basis point rate cut, there is a possibility that we could see the gold and silver price correct. I would view that as a buying opportunity because ultimately the prices are headed much higher from here. But that is possible. But if we get the 50 basis point cut, I think gold and silver are going to take off. That's just my forecast. Short-term forecast could be, off, of course. I don't have a crystal ball, but that's my take. I think that's what's going to happen. Now, let's talk about why the Fed has got to cut. And it's not because the Fed cares about jobs. That's what they tell us. They got the dual mandate to fight inflation, keep inflation at 2%. The mandate is actually for them to have stable prices, but the Federal Reserve interprets that as they need to devalue the dollar by 2% annually. It's not about their mandate to seek full employment. The reason is because they have to cut to enable the massive deficit spending that is occurring in Washington. Now, it has to do with the banks and commercial real estate also. Ultimately, the whole system is just massively addicted to new debt being created, keeping the deficits high, and that spreads to the commercial real estate sector, that spreads to regional banks as well. But let's just talk about the Treasury. So this is the monthly Treasury statement for August 2024, recently released by the U.S. Treasury, and you can see here it kind of itemizes the expenses and the receipts, the outlays and receipts of the Treasury. Now, one thing you might notice here is that the deficit is at $380 billion for the month. Now, if you go to the U.S. debt clock, which shows us that the debt has now risen to $35.37 trillion, it says that the federal budget deficit is $2.1 trillion. But if you take this month's data, now, for comparison, the July deficit was only $243 billion. The median estimate for August's deficit was $292 billion. But what we got, $380 billion. Let's do a little math. Let's just annualize that. If you do that for 12 months, you've got a deficit of $4.5 trillion. That's pretty incredible. Now, one thing else you might notice here is that they list the net interest at $80 billion. But this is another sort of accounting trick that the Treasury uses to obfuscate how much interest they're actually paying on the debt. This is the net interest. But if we scroll down to Table 3, Summary of Receipts and Outlays of the U.S. Government, August 2024, excuse me, bad time to go through puberty here. I guess my voice is changing. Sorry about that. Then we see the interest on Treasury debt securities gross. So the gross interest is actually current fiscal year to date, and the fiscal year ends September 30th. It's at $1.048 trillion. Now, this is the first time in history that in one fiscal year, the Treasury has paid over $1 trillion in interest. Now, the gross interest as opposed to the net interest. The net interest is what the Treasury pays to the public in interest. The gross interest is what it pays to the public, as well as intragovernmental interest to government bodies that hold treasuries, such as Social Security, etc. But I mean, that's all really just robbing Peter to pay Paul. At the end of the day, the interest has to be paid. And so the real interest level for the first time ever has now exceeded $1 trillion. And keep in mind, the fiscal year ends September 30th. This is the data from August. So if you look here at this line, this is the forecast for the entire fiscal year, which we are in the final month of right now. It's going to hit $1.157 trillion. And who knows, that's a forecast. If September runs over in terms of deficit spending, if something happens with interest rates, it's possible it could even be higher than that. So the interest on the debt is absolutely exploding at the same time that the deficit is soaring. The only time I believe that the deficit in a single month has exceeded $380 billion was during some of the peak months of COVID spending, when the government was just, signing stimulus checks, paying massive unemployment, giving out loans to troubled businesses. And yet, right now, again, according to the political elites, according to the central bankers, we're in one of the strongest economic recoveries in history. And yet the government is spending $380 billion in 1 month that it doesn't have. So, I mean, you tell me, you let me know in the chat. Is this a sign that we're in the strongest economy in history? Is this a sign that we have the strongest job market in history? They like to talk a lot about the GDP growth and how much the economy is growing. Well, yeah, of course it is. When you're borrowing $380 billion a month and spending that into the economy, I would hope you get some growth out of it. Because if you don't, you're in a lot of trouble. You're even in a lot of trouble if you do get some growth, because now this just gets tacked onto the enormous national debt, and the interest is soaring. So look, that's the reason that the Federal Reserve is going to have to cut next week. It's not because they care about the jobs market. It's not because they've beaten inflation. The jobs market is likely going to get worse, and inflation is going to get much worse. I mean, right now they're talking about cutting while inflation is already elevated. So, expect more dollar debasement in a very big way. And if we do get that bigger cut, the 50 basis point rate cut, you can expect gold to continue taking out record all-time highs. Silver is, I think, just going to explode higher. I mean, there's so many reasons for the gold price to move higher. There's a huge supply deficit to the tune of more than 200 million ounces annually. This is the fourth year that we've gone into a massive deficit with silver. There's new applications for silver coming out all the time. I did a video recently on the new Samsung solid-state battery that uses silver that's going to revolutionize the way electric vehicles work. Silver is a unique material. We're heading into a time period where you have all of these technological advances, electric vehicles, Internet of Things technology, alternative energy. They're trying to transition to solar energy. That's going to require a huge amount of silver. There's lots of fundamental reasons for silver to be moving much higher, and those don't even seem to be getting priced in yet. I mean, this is all just about what the Federal Reserve is going to do next week. That's why we're seeing the price move right now. But can you imagine if silver doesn't explode in price? If they're running a 200 million ounce deficit every year, eventually the above ground supply is going to dwindle to next to nothing. Then what happens to the price? Well, that's when you get a silver squeeze, I guess. And that may be coming as well. But even if that doesn't occur, when you're talking about the price of silver in dollars, it's headed much, much higher, because the dollar, well, they're going to be creating huge amounts of dollars out of nowhere to facilitate and finance the massive deficit spending that is occurring in Washington. And if you look at the numbers, I mean, the most recent Treasury statement, $380 billion in 1 month. How is that sustainable? And it's not getting better. It's only accelerating from here. So, look, yeah, silver and gold are up big today. I had a comment earlier. Someone said they were waiting for gold to drop down to $2,400 to buy the dip, and they were disappointed that it's taking off to new record all-time highs. Well, if you're waiting for a dip, you might be waiting for a long time. So look, I mean, I stack silver, especially whether it's up, down, or sideways, because I don't care if silver's $26 or $31 or $25 or whatever. It's incredibly undervalued. So I pursue a strategy of dollar cost averaging. When silver's at $50 or higher, when silver's at triple digits, I'm not going to care whether I bought at $31 or $26. All I'm going to care about is having some physical metal. And yeah, I agree with one species who says $2,400 not going to happen. Yeah, probably not. I mean, maybe if we do get a correction on some kind of a Fed announcement next week, $2,400 would probably be the bottom. For silver, if silver corrects, I really think we've put in a floor here around $30 because look, it's broken out of this pattern. If it breaks out and then say corrects, the worst thing that would happen is it would probably retest the level at which it broke out, right? That's where you would expect it to fall from. Once resistance is breached, it then becomes support. So, I mean, I think we've put a floor in silver maybe at $30. I mean, could it drop below 30? Yeah, if it does, I think it'll be met by strong buying. But it looks like the consolidation in silver is over, and we may be headed to the next phase of the breakout, which should send it above the previous high of 32.50. And I think in short order, we could be headed towards, well, new record all-time highs, so above $50 an ounce. That's my forecast. Let me know what you think in the comments down below. Let me know what you think about any of the information we covered today. Thanks for watching, everybody. Do me a favor, smash the like button if you haven't done that yet. If you stuck around this long, you must have liked the video somewhat, so do me a favor, smash the like button. Leave me a comment. That helps a lot with the algorithm too. Share the video on social media. You can follow me at x.com/stacksmarter if you are on X. And with all of that being said, thanks for watching, everybody. Stay safe and happy stacking. I will catch you next time. Smart Silver Stacker.